going to be a challenging environment because there's going to be a fight for customers, and the branch is still a large part of that, but it's also a huge financial burden. So how do you balance that out? I think that you really have to make every bit of that square footage count. But ignoring that investment in the branch is a critical mistake.
Welcome to the Service Experience Podcast. My name is Yoni Lavi. I'm the CEO of Qtrac, and this show is where we talk with leaders about the in-person service experience. Most companies have digitalized their online channels, but the physical visits is still a blind spot. We explore how leaders are turning that blind spot into an advantage, using real-time data and creating a higher value experience both for customers and the associate. Welcome to the Service Experience Podcast. I'm Yoni Lavi. I'm the CEO of Qtrac. We help organizations digitize and optimize the in-person customer journey. Today, I'm joined by Myra Thomas, banking analyst at EMARKETER, and her latest report, The Branch in 2026, looks at why branches still matter for relationship growth and how customer needs are diverging. Before we get into your research, Myra, I'd love for people to get to know you. You spent about 20 years as a financial editor and a writer and becoming an analyst. Just tell us a little bit more about your journey and how you got started.
Absolutely. Actually, I began in finance, working for a Lloyd's of London intermediary of all things, basically doing financial analysis. And so I always wanted to be a journalist and researcher and applied those skills from working in finance to the work that I began to do working for New Jersey's Business Journal, as well as starting to work for industry. So, I spent most of my, recent time before I joined eMarketer working for some of the major banks, working on their firsthand research, et cetera. So, so I've been in and around the industry, part of it for quite some time. So, and this journey with eMarketer is wonderful because I get a chance to apply, that journalistic spirit and interest, alongside working with some great researchers, and survey folks that we have on staff to sort of bring those two worlds together. So it's been a great experience.
Yeah, and you're seeing the entire forest, not just through the trees from that
Yeah.
lens, which is cool.
Yeah.
And it's an interesting time, of course. Your branch report states it that digital acquisition for banking is still growing, but this movement to consolidate branches has kind of halted, and there seems to be this resurgence of the need for the branch for cultivating physical relationships. Can you expand on that?
Sure. I think the biggest push for this has been sort of everyone's been talking about this K-shaped economy for quite some time. And, I think that banks have pretty much gotten to saturation as far as how they deal with ultra high net worth clients. And they're wanting an even more personalized experience. They're looking for branch locations that are private and more exclusive, almost like a concierge experience. And they have, banks are also dealing with customers that are sort of moving down, a few rungs financially. And so they need to figure out how to deal with that and what services they can provide. So I think that now you're seeing banks like JP Morgan moving towards locations that are ultra exclusive, that provide very personalized attention, as well as providing community centers that are more, focused on personalized financial learning and guidance, as well as providing, basic financial services. So, you're really seeing the locations sort of stratify. You have branches like banks like PNC that are even utilizing mobile banking to sort of bring banks to locations where they can't necessarily support or justify financially a full service branch. So that's been interesting to see because there's tons of areas, particularly rural areas, that need more branch banking services.
Agreed. And that word, there's different forms of this word: stratification, segmentation, but having different client segments and being able to action the journey for those unique segments is so critical. And I'd say is a must for branches.
Yeah, it really is. I think that, the thing that we've found, particularly in our firsthand research, is that the branch is still a very important part of the customer journey. And, while there's been tons of reports and research and books that have been written about the branch is dead. It's not the case. Our firsthand research is showing that, no matter the age group, people are still they're opening accounts primarily at the branch. Okay. While younger generations may utilize digital, the app more so to research, they're still coming into the branch. Gen Z, millennials are still coming into the branch to open up their actual accounts. And so people want that firsthand experience. I think the big part of the branch experience is the fact that once you get to talking about more, financially, not risky, but, situations
Air
where
risk.
higher risk situations, right? Whether you're dealing with debt or whether you're dealing with, mortgages or refinancing or whatever else, those high level transactions, people really want to come into the branch. But even for just the simple opening a checking and a savings account, people are walking in the doors. And the other thing that's really defining, how do they make this decision about what bank they go to? They still want proximity of a branch. That's still in the top 10
See
as
that too.
far as, and it's actually, number one for most people. They're still looking to have a branch nearby in order to open a bank account.
Agreed. I think that's where advice happens. Those high risk requires advice. Good advice leads to trust and loyalty.
Absolutely.
So those are
Absolutely.
critical outcomes. And you mentioned new account opening, and in your report, it states that only 35% of all average balances come from digital acquisition, the rest from in person. So what does this tell us, and what's actually happening in the branch that deepens the relationship the way digital isn't?
Yeah. I mean, the other point to add to that too is after a period of time, you'll even see the drop off of the actual amounts in a digital account versus a account that was opened in branch.
Makes sense.
I think that, it just speaks to the issue of people wanting personalized attention and to be able to know that they're, looked after and that they can move from, a digital experience, a phone call, and actually be able to walk into a branch to resolve something, because people are still walking into a branch to resolve things if they have a serious concern. So I think that really speaks to that. And the banks have a harder mission now because they have to think about how they're going to actually assess, you know, what is a good, customer? How do I get and how do I get my customer to stay loyal to my branch, loyal to the bank? And that's going to be a different measurement than what they've looked at before. I think for a lot of banks, they've really looked at foot traffic, and foot traffic is not necessarily a good barometer on how banks are going to be, considered successful.
Yeah, it goes back to segmentation. There are still
Mhm.
people that come to a branch to deposit checks when they can still do it on mobile. Then, as you
Absolutely.
mentioned, there are people who have high risk, pivotal moments in their life that require some kind of major financial decision. On a ticker, on a door ticker, that's just two, but one is very different than the other. Um, there's this kind of trend that certain segmentations, like affluent customers, have these really big financially stressful situations or bigger financial decisions, but then also on kind of the lower categories, there are some critical things due. How do you design the branch and or the branch experience to accommodate such different demographics?
Yeah, I think, this is the part where having an omni-channel experience really helps the branch personnel sort of bridge that gap. Um, you're looking to have specialized people in the branch to service the community that you're in. And I think banks are spending a lot of time, the big banks are spending a lot of time to better assess the communities that they're in and how, where they're going to concentrate certain types of branches. But in order to get their personnel to better understand products, to be able to be, on the front lines and answering questions, they need to be obviously educated in the products that their customers walking in truly want. They have to better understand their customer. And, AI is helping some of the larger branches sort of build that bridge between digital as well as the in-branch experience. It's also helping in the branch, providing branch personnel with expertise that might look directly at, products and services in a more, holistic way to present the customer with options, whether it be with investments or expenses, financial advice, so they can sort of tailor that to the clientele that walks in, no matter what their income level might be. So, I think the most successful banks are finding ways to bridge that gap and to provide AI and all sorts of tools in branch to help their branch personnel become even more expert in the products that they think their customer needs.
I agree with you. Um, I would say even before AI comes just bridging the data gap. So
Yes.
one of the things that we see with our banking clients is there isn't really a source of truth for customer data. Some is held up in CRM, some is held up in a banking platform, some is held up in maybe some kind of case management or call center software for issues. And very often, when someone walks into a branch, maybe the in-person banker has access to one or a few of those, but it isn't put together in one cohesive story that tells them, Myra's who's about to speak with me, she's ready for, let's say, the next high value product, but she also has an open ticket with call center because she has this issue with mobile banking to get that full picture.
Yeah, I think this is a problem for, many banks still, not just community banks and smaller credit unions. It's a problem for many larger banks as well as regional banks. You know, banks are, still, hamstrung with legacy systems and they operate in silos. And so some of the best top five are figuring out how to bridge that with the right, fintech partnerships as well. But it's still a problem. Banks are still sitting on a treasure trove of data that they're not using adequately. And, it's something that we've consistently seen. And so I think that will be the big challenge. Will AI be able to bridge some of that gap? I think it can. I think it can. I think right now we're still sort of in the infancy of understanding how well that will be able to pull together those disparate sources in order to, make banks more successful at utilizing that data to the best of their capabilities. But I think, it's essential because right now, competition's high and, the investment in AI is also higher. And so, I think there needs to be an understanding that that has to be sort of the big priority more so than trying to figure out customer facing applications for AI. It's more or less trying to boost, your return on investment through utilizing that information to better understand your customer.
I love that. So I agree. AI can be pointed directly at the customer or it can
Absolutely.
be pointed at the frontline associate, the frontline advisor, who we've already agreed is critical in creating the trust, whether they're enabled by AI or not. And I love this idea that if we equip them with this highly personalized playbook, let's call it for lack of a better words, of how to handle the customer, they can really boost outcomes. I think that's one great idea for leveling up branches. Is there anything else about maybe branches, that physical journey that you think maybe needs some work, whether that's the way they staff, the layout, the way they handle walk-ins and appointments? Is there something else that you're seeing in terms of maybe rethinking the branch experience?
I think, some banks, a few banks are getting it right, but for the most part, they're still trying to figure out how to design spaces, right? And, it's an expensive process rolling out a branch or, rehabbing a branch and renovating a branch. So, trying to figure that out takes quite a bit of time, and a lot of money. So that was really the incentive to making in-store branches and that sort of thing, because they save you, space. They provide a built-in foot traffic, brand recognition. But for the most part, people are less interested in walking into an in-store location and filling out a mortgage. They want a private experience. They want to
Yes.
feel as if they are being catered to. So the standalone branch really is the gold standard as far as, long lasting relationships and, higher level financial transactions. Um, I think it's going to be a challenge. I mean, recently, we've seen for years that, branches have closed and we've seen a tremendous drop off in branch locations. But now, last quarter, we're picking up. The slowdown, there's a complete slowdown in the number of branches that are closing. JP Morgan, Huntington, Fifth Third, they're opening locations. So, I think they understand the value. I think the other thing that's happening, obviously, we've seen a lot of mergers and acquisitions that have allowed, some of the larger regional players to develop a presence in what they see as high value locations. But it's going to be a challenging environment because there's going to be a fight for customers, and the branch is still a large part of that, but it's also a huge financial burden. So how do you balance that out? I think that you really have to make every bit of that square footage count. Um, but ignoring that investment in the branch is a critical mistake.
I agree with you. One of the things that we're seeing, not just in banking, but also
Mhm.
in other industries, specifically retail, is that the customer's wallet, I'd say, is split between brands and fragmented more than ever before. So, in our home, we shop at Target, at Walmart, at Whole Foods. It's split a dozen different ways in terms of grocery. I think the same, and what we're hearing back from banks is true. You may frequent a Chase bank multiple times per year and have a checking account with them. It does not mean that you use all their products.
Absolutely.
Um, so I'm kind of wondering, assuming that even if you got all this AI right and you bridge the gap, where in this kind of trust and financial wellness and loyalty where we keep market share, does the call center, mobile banking, and branch all play with one another?
I think you are reading my mind because I'm writing on this at the current moment as far as banking trends. Our research shows that, people are splitting their financial relationships. They have a primary account one place and they have secondary accounts. They may have a primary banking relationship that's primarily, deposit accounts, checking and savings traditionally. But for the most part, they're spreading many of their high value transactions over other financial institutions, whether they be neobanks or, mortgage companies or what have you. So you're seeing, you're sitting at the primary bank, but you have a secondary relationship primarily for mortgages with someone else. Credit cards are sitting with others, so those are completely split. How do banks get, a more, loyal customer? How do they get across that, you know,
Share of wallet.
that share of wallet? Forgive me. Yeah, that's a situation where banks need to be better about understanding their customer and the life triggers that happen that give them those opportunities to reach out to the customer before the customer decides that they're going to go on a comparison app online, a comparison site online, and look for the best mortgage rate. It requires them to figure out how to personalize recommendations, whether it be for a personal loan or an auto loan, before someone walks into the dealership and they get targeted by whoever, inside the dealership or dealer financing. So banks need to be much more sensitive to preempting, those situations and being the first offer that comes before, the customer starts looking for a particular product and service. And, more than likely, they are going to go online. They're going to go online. They're going to look on comparison apps. They're going to get sent offers that are embedded when they, go wherever. They're comparing and looking at cars. Ads pop up for financing. They're looking on AI. They're asking Chat GPT, what's the best rate on a credit card at the moment and with who? So banks have to be savvy on not only figuring out how to get in front of the customer before those things happen, but when they decide that they're going to potentially, hop on Chat GPT or whatever LLM they might be on, how do they surface, the products and services to get them to them. So they really have to figure out their GEO strategies in order to make that happen. And, to turn up when, in Reddit or Wikipedia or all those other things that then feed into the LLMs so the customer will see them before they go somewhere else.
I love that. And once again, that same knowledge that's feeding the GEO strategy or the LLMs is the same knowledge that can empower advisors in the branch. You can pull that all the way through. Because if
Absolutely.
they learn on that post that, some major financial institution believes that the right time to shop around a mortgage is X, Y, and Z, or these are the 4 or 5 parameters they should be thinking about when they then go to the branch and the advisor can pull that through. I think that really closes the loop very nicely.
It does. It does. That's absolutely true.
So last big one, because we spoke about data being this amazing nutrition for AI, for better understanding customers. What do you think banks fail to measure in physical branches that could add to this puzzle and make it work a lot better?
The very first thing is, well, foot traffic is out the door, right? Because that doesn't necessarily tell you the value of a relationship. Because as we've seen, I might be holding very few dollars in a particular primary account, yet I have another secondary account over here at another bank, and my more valuable relationship somewhere else. I think that it's a longer tail on the measurement the banks need to look at. What is the actual value of that relationship? Are we getting higher value transactions from that customer? How many transactions, how many different products are we actually providing to that customer? And, are we seeing their investments? Are we seeing checking balances? Are we seeing savings balances grow over time? And those are things that I think banks have become, that are starting to understand, that are the things that they need to measure. They've spent quite a long period of time just looking at foot traffic for the most part. And so I think it's hard to get out of that idea. But, it doesn't necessarily mean that you're seeing a number of people come into the bank and they're actually, picking out one of your products or services. So, banks need to think about how they're going to, look at the customer in the future and, how they can help them through the various stages of their life to become, a bank that they're loyal to and a bank that they will take their higher value transactions to.
Agreed. We actually learned with one of the banks we worked with, they're a very large North American bank, that 50% of customers over a 12-month period when we were working with them, we still work with them, that abandoned, meaning they entered the branch,
Hmm.
they, through our software, had a stated intent of why they were there, and then never got served for one reason or another. They may have just ran out of time and left, something happened. 50% of them were when opening a new account.
Yeah. Okay.
So you can imagine uh, kind of how painful that is and how important it was to understand that so that they could action the kind of the new account flow better.
Yeah, absolutely. I think, some of the better banks are realizing, there's certain things that you can facilitate quickly inside of the branch, but then, there also has to be that simpatico between the branch and, online services in order to kick it back to whatever expert level help that they might need. If you're walking into the branch and you have a very complicated question and they can't answer that question in that particular branch, which might be the case because it's a specialized branch, then they have to be able to provide the customer with immediate service somewhere else. And that means in the digital experience. So, and that experience has to be with a human person.
Is there a CX leader, an operations person, anyone kind of in this space that's been influential to you or helped shape your opinion?
I think it's just that, I've been in and around working with a number of financial institutions for years and having worked on various projects that sort of bridge the gap between the technology side, subject matter experts, as well as dealing with, marketing, even of products and services. So looking at the digital experience as well. So trying to work between all those various portions of the bank and realizing how siloed they might be, it does give me a better perspective on some of the, banks that are doing well in this space and the ones that aren't. Because I've just, seen it sort of from the inside and all the foibles that, many of those institutions still have, even some of the larger ones, people will be surprised by. So I think that's pretty much what's informed my experience, having just worked with the banks, and across various branches of banks. Yeah.
That's great. Myra, this was really fantastic. Where
Was a
can people find your work if they want to follow your research or follow your work?
Yeah. Just look us up, emarketer.com. We welcome people checking out our research. I have a banking trends report coming out in a little bit. So it's going to go quite in depth on some of the things that we've spoken about. So that'll be good to know.
Awesome. And hopefully we can put some of the links on our show. Thank you so much, Myra. That was awesome.
I appreciate it. Thanks very much for having me.
Thanks for listening to the Service Experience Podcast. If you want to see how we're helping leaders close that in-person blind spot, fueling sharper decisions and greater value for customers and the enterprise, visit Qtrac.com.